We are seeing, and I want to start kind of macro and then we'll get a little bit more granular. The French economy, the data that is coming out today and over the last few days paints a very grim picture, and it's being replicated across Europe as well. You see a lot of the demand story as a result of what you do in providing power. What kind of numbers are you seeing relative kind of to where we were pre the crisis right now?
Hi, Guy. It's great to be on the show again today. Indeed, we presented our results today. 2Q was very impacted, and because most of our large countries had been in lockdown, obviously in April and May, and that was certainly the case for France. What we're seeing now is a rebound on energy consumption, and it makes us quite confident on the second half.
I wonder if you're noticing, Judith, it's bifurcated at all as certain areas now of Europe are shutting down. Do you have any window into that?
So it is. On the other hand, though, the countrywide lockdowns are hopefully not repeating. You know, that was really the topic, of course, of April and May. So we're seeing pockets of lockdown, and quite frankly, in all likelihood, that's going to continue. For us, it's actually not just the energy demand. Where we were the most impacted is our client solutions business, where in some cases we just, quite frankly, didn't have access to our customer site, and that was costing us business in the first half. I think collectively, all of us are now better prepared. You know, we have 22 million masks as a 3-week stock. I mean, the new guidelines were put in place on distancing like everybody else. And so, quite frankly, I think collectively we will be better prepared, even if there is no waves.
What are you anticipating as we head into the autumn, Judith? You talk about being better prepared. Do you think the more positive trend that you talk about is sustainable as we head towards Christmas?
Yeah, we had 3 big impacts in the first half. One was COVID related, and that was, like I said, major because all of our big countries were in lockdown. We also had a temperature effect, which is important for us in gas sales, 200 million. It was the hottest winter since 1900. And then we had an impact from Brazilian real. So I would think that hopefully all 3 of those, at least the first 2, will be better in the second half, and that should be good news. What happened, you know, you mentioned our share price up 4%. It's actually 5%, I think, at the moment. I think what helped is also we reinstated guidance, which was well received. We reaffirmed our dividend policy, and certainly last but certainly not least, we talked indeed about our strategic acceleration that will bring a lot of clarity for the market.
Judith, on the call, you guys talked about selling at least 8 billion euros of assets. Obviously, Engie is going to be taking advantage of a lot of the recovery fund from the EU, sort of moving into alternative energy. Can you give me some perspective of what kind of assets you're going to sell and how quickly you can sell them?
Indeed, I think one of the biggest opportunities that we have ahead of us are the relaunch programs in the different countries, but also of the European Union. Many of the governments are really looking to use this money to make their countries more digital and have a green recovery. Green recovery, of course, means renewables on electricity, it means green gas, it means renovation, all of which we're incredibly well positioned to tap into. And so that certainly is going to be a big advantage for us. So really the announcement of today is we would like to have a higher priority of our capital allocation going into renewables, but also into our infrastructure business. And that will mean that certain assets we're going to look at and do a strategic review, especially in our client solutions asset-light business, with a view of saying how closely linked are these activities to the energy transition, how closely linked are they to our core strategy, and then take a decision on what might leave the company.
Judith, how far along are those conversations? Are you kind of launching this today? Are some of these conversations already taking place? Just give us a little bit more granularity in terms of the detail as to how this is going to work.
We're launching the conversation today. We have promised to the market to come back in the first half of 2021 with a more precise list of investments, obviously, and timing of these different assets. The strategic review, we had looked at it, of course, from a high level, but given that it's a people-intensive business, we're going to have to, get a real project organization around this, and you can only do this once it's out in the open, which is one of the reasons we wanted to announce today. So I would say, certain things, obviously, we're more advanced than others, but expectation is that first half 2021 we'll come back with a more detailed plan.
As a CFO, developments with the U.S. and Russia obviously have to be front and center for you. You guys are partly financing the Nord Stream 2 pipeline to move natural gas from Russia to Germany. What happens if the U.S. sanctions the project and sanctions those that are in reaction to working on the project? What do you do?
We're still hopeful that this is not going to happen. This is a strategic deal for the energy supply of Europe, and quite frankly, it needs to be treated that way. So we're still hopeful that we will not be hit by that the project will not be hit by any sanctions.
Just to kind of wrap things up, Judith, in terms of your expectations for the European economy, for the way that you're going to be positioning yourself, do you get the vibe that Europe is significantly now ahead in terms of its recovery than other parts of the world? A lot of investors around the world are suggesting that Europe has a better handle on this crisis than the United States, Asia, and many other regions as well. As you deal with your customers, is that something that you get? Do you get that sort of sense that Europe is actually coming out of this?
We are seeing reassuring signs from our customers, and like I said, a lot of our activity is back to almost pre-COVID levels. However, having said that, we all know the virus is still there, and so we need to be prepared collectively for different pockets of confinement in the various countries. I don't think there's any way around that, and it's hard to say where it's going to be and when it's going to be. But again, I feel that we're much better prepared going into this. We have done a lot of work also on variabilizing costs and being ready in case, another wave was to hit. And so I truly believe that collectively we're better prepared